The anticipated pullback to the 50-day moving average was witnessed this morning in the Dow. However, notice what the Dow ended up as. Positive 18 on the day, or creating a hammer signal right at about the same level it bottomed out before and bouncing off the 50. This clearly indicates that even though the market is slowly drifting down, there isn't any massive selling. It's just kind of, not inactivity, but lack of interest in the markets during the summer doldrums. But this will be a very indicative setup. If they start trading positive tomorrow or next week, pretty much tells you the sideways move is over. They were just waiting for the 50-day moving average to catch up. And now we could see another wave to the upside. And without any drastic direction in the market, it allows for short positions to be working, as we've seen in our sale recommendation or short recommendation on Juno, that failed at the 50, closed below the T-line, and then in the last few days had a doji gap down, which tells us our next target could be this level, and if it breaches that level, you could have another leg like this to the downside. And notice how patterns will still work effectively even though the market's not going anywhere. Our recommendation on Cena, based upon the first slow curve breakout, and then a J-hook type pattern, is still working nicely as long as it stays above the T-line. We've got some good profits in this based upon another breakout of a slow curve pattern and the lack of a close below the T-line. And being able to identify high probability trade setups, like in our recommendation on YY, that if this opens positive tomorrow, producing a doji sandwich, which means if it opens positive, more than likely they're going to move positive after a doji, number one. Number two, a doji sandwich setup tells us that this day right here will be the same magnitude as this day right here, which indicates that the 200-day moving average is not going to act as resistance anymore, which indicates that our bobble pattern, where it failed at the 200, pulled back, couldn't really get away from the T-line, when it goes through the second time, the next magnitude move is probably about the same as this one. Again, just knowing what the open will represent allows investors to enter trades with confidence right at the appropriate time. That'll be it. We'll see you in the chat rooms.